Who really controls the world's money? Most people believe the answer is simple. Governments print money. Governments control money. After all, currencies have flags on them. Presidents speak about them. Central banks have official buildings. So it feels obvious. But what if that belief is incomplete? What if the institutions we think control money don't actually create most of it? What if the real power doesn't sit in government offices, but inside the financial system itself? Because here's something rarely explained clearly. Most money in the world is not printed. It's not backed by gold. And it's not created by governments the way most people imagine. It's created digitally, through banks, through loans, through debt. And once you understand this, the question changes completely. The real question is no longer who prints money. The real question becomes who controls its creation, who controls its flow, and who benefits from it. This video is not about conspiracy. It's not about politics. And it's not about blaming one side. It's about understanding how the modern financial system actually works. Because money today is not just currency, it is power, it is access, and it shapes every modern economy. So if you've ever wondered why banks matter so much, why governments seem powerful but limited, and why debt drives the global economy, then this video is for you. Let's break down who really controls the world's money. Before we understand who really controls the world's money, we need to start with what most people believe about money. Most people think money works like this. A government needs money, so it prints currency. That money enters the economy. People use it to buy things, and that's how the system runs. This idea feels logical, simple, easy to understand, because that's how money looks from the outside. You see physical notes. You hear about printing presses. You see central banks announcing new policies. So naturally, people assume governments are fully in control. But here's the problem. This explanation only describes a very small part of the system. And in modern economies, that part is no longer the most important one. Yes, governments issue currency. Yes, central banks exist. Yes, physical cash still matters. But physical cash is only a tiny fraction of all the money in the world. More than 90% of money today exists only digitally. Numbers in bank accounts, balances on screens, entries in financial systems. And here's the key point most people never hear. Governments do not directly create most of this money. Commercial banks do. When a bank gives a loan, it doesn't hand out existing money, it creates new money. The moment a loan is approved, money appears in a bank account. That money did not come from savings, it did not come from gold, and it was not printed first. It was created as debt. This means money enters the system not as wealth, but as an obligation. Every unit of money is tied to repayment, to interest, to responsibility. And once you understand this, you start seeing the system differently. Because now the question changes again. If banks create most money through loans, what exactly is the role of governments? And who truly controls the flow of money in a debt based system? To understand who really controls money, we need to understand one simple process how banks create money. Let's take a very simple example. Imagine you walk into a bank and apply for a loan. The bank does not go into a vault, take out cash, and hand it to you. That's not how modern banking works. Instead, the bank approves your loan and types numbers into a computer. That's it. New money appears in your bank account. This money did not exist before that moment. It was not transferred from another customer. It was not taken from savings. It was created digitally. This process is legal. This process is normal. This process happens every day. And this is how most money enters the economy. When you spend that loan money, it becomes someone else's income, a salary, a business payment, a transaction. The money feels real. It behaves like real money, but it exists only because debt exists. Every dollar created this way comes with a promise to pay it back with interest, which means more money must be earned in the future than was originally created. This is why debt is not a side effect of the system. Debt is the foundation of the system. Without loans, the money supply stops growing. Without growth, the economy slows down. And this is why banks play such a powerful role. They decide who gets credit, who gets opportunity, and who gets left out. Because when you control money creation, you don't just control wealth, you control economic behavior. So now the next question becomes unavoidable. If banks create most of the money, what exactly do governments and central banks control? So if banks create most of the money, the next question is obvious. Where do governments and central banks fit into the system? To answer that, we need to separate two very different institutions: central banks and commercial banks. Commercial banks are the ones people interact with every day. They offer loans, they accept deposits, they create money through credit. Central banks work very differently. They do not give loans to the public. They do not create money the same way commercial banks do. Their job is not creation. Their job is control. Central banks set the rules of the financial system. They decide interest rates. They control how expensive borrowing becomes. They influence how much money banks are willing to create. When interest rates are low, borrowing increases. Banks create more money. When interest rates rise, borrowing slows down. Money creation slows with it. Central banks also decide how much liquidity exists in the system. They can inject money into banks, or they can pull it out. But here is the critical point most people miss. Central banks do not control where money goes. They don't decide who gets loans. They don't choose which businesses survive. They don't pick who gets access to credit. Commercial banks do. Banks decide who is creditworthy, who is risky, and who is excluded. This means power is divided. Governments and central banks control the environment. Banks control the distribution. One sets the rules, the other plays the game. And this is where real control begins to take shape. Because when access to money is controlled, behavior follows. So now we can finally answer the question: who really controls the world's money? The honest answer is not simple. It is not only governments, and it is not only banks. Control over money is shared. Governments and central banks control the rules of the system. They decide the legal framework. They set interest rates. They manage inflation. They step in during crises. But they do not decide who gets money first. That power belongs to commercial banks. Banks decide who receives credit, who gets loans, which businesses expand, and which ones never get a chance. This means real power does not come from printing money, it comes from controlling access to money. Because access determines opportunity. Where you live, what you can build, how fast you can grow. So while governments shape the system, banks move the money inside it. One controls the environment, the other controls the flow. Neither side acts alone. They depend on each other. But for everyday people, the experience feels the same. Money appears or disappears based on decisions they never see. And that is why the question of control matters. At this point, a natural question comes up. If this system concentrates so much power, why does it exist? The answer is not corruption or control. The answer is efficiency. Modern economies need constant growth. Businesses need capital to expand. People need loans to buy homes. Governments need financing to operate. A system based only on physical money cannot support this scale. That's why the world moved away from gold backed money. Gold is limited, economic growth is not. A gold based system restricts credit, it slows innovation, it limits expansion. Fiat money solves this problem. It allows money supply to grow with the economy. It gives central banks tools to manage recessions and crises. During financial shocks, governments can inject liquidity. They can stabilize banks. They can prevent collapse. This flexibility is why the system survives. But flexibility comes at a cost. Debt grows. Inequality increases. Mistakes become larger. The system works not because it is perfect. It works because enough people trust it. Money today is not backed by gold. It is backed by belief, institutions, and collective agreement. As long as people trust the system holds. So, how does all of this affect you? Not governments, not banks, you. Every major decision in modern life passes through the financial system first. Education, housing, healthcare, business. Access comes before effort. You don't need money to survive, but you need money to access survival. And whoever controls access shapes behavior. People work longer hours, take on more debt, delay dreams. Not because they are weak, but because the system is structured that way. This doesn't make money evil. Money is a tool, like fire. It can build or it can destroy. The difference is understanding. Those who understand money use it consciously. Those who don't feel controlled by it. Once you see how the system works, money loses its mystery. And when mystery disappears, fear weakens. The goal is not to escape the system, the goal is to see it clearly. Because the moment you understand money, it stops controlling you. So the real question is not who controls the world's money, it's whether you understand it.